Unfiltered, your channel where we meet with CEOs, business owners, different types of advisors, from attorneys to CPAs. And today I wanted to welcome Alex Carini, which is the founder and the CEO of a boutique real estate firm headquartered here in New York City. Alex Carini, welcome to the channel.
Thank you for having me, Gene.
Absolutely. Truly a pleasure having you, Alex. I have known you for the last about, what, 4.5 years. Time does fly so very fast. I think you're one of the examples of, those truly American success stories where the people came from overseas to America, trying to make something out of nothing. And I think you exemplify, an individual who, comes here, works very hard, rolling his sleeves and really creating a very nice, very meaningful business. So let's talk to our audience about how you got to the US, how you got involved in the real estate business. I think it's a pretty fascinating story. Go ahead, please. Well,
thank you, Gene, for the compliments, and definitely I do have an immigrant story, as they call it. And originally I'm from Italy. I'm sorry?
I said just like myself. I also came here, as you know.
That's right. That's why we connect very well. So absolutely. So I originally came from Italy here. I initially went to school in Boston, studying international business. Now, when I say initially, I mean I was 19 years old, part of a double degree program, they call it. So starting my school in Europe, in Italy in particular, and then coming here to Boston. And, when you are 19, 20, 21, 22, I graduated, you have no idea what you want to do, truthfully. And, my family is in business as well, actually in the real estate business as well, in Italy and Spain. And so, you try and see what you're most, what you have more affinity towards, and so on and so forth. My passion for real estate really came when I decided to move to New York City. And New York City is famous for buildings, mainly. And so when I came here,
high rises, indeed. Attracts people from all over.
Right. That's right. And so I tried simply to match my background in international business, having lived and been and speaking, in different countries, different languages, to what New York City had to offer. So a vibrant international market. Real estate is one of the top market for New York City, but for the whole world as far as profitability, with finance, insurance, and other sectors. And, in real estate, there's a certain human aspect of people that buy real estate and manage it and live there with their family when you're talking about residential, or even when you talk about commercial, starting and expanding their own business. So there's a certain aspect of real estate that I really loved. And, now fast forward many years in the industry, I own a residential brokerage company in New York City, and also a commercial brokerage company also based in New York City. So we are involved in a variety of real estate transactions, buying, selling, and renting of individual luxury apartments, especially when it comes to Manhattan and New York City in general. And commercial, we do the same with buildings and retail spaces, leasing, and office leasing. As far as domestically, being that we work with a lot of international clients that come here and invest in, of course, in real estate from all over the world, really, Western Europe, South America, but also Asia, Middle East. We also are present and cover the Miami market, especially, and the Los Angeles market as well. And on a case-by-case also, we've done other cities like Boston, Chicago, etc. So that's a little bit of me in a nutshell.
Well, that's quite a story. So it definitely helps coming from the family background, because my understanding is that even before you moved to the US, you have done some smaller deals, or you had some involvement in different shapes and forms as far as real estate transactions, being it renting, leasing, probably not at the same magnitude that you are operating nowadays. But I mean, hey, kudos to you. You definitely have created a very nice, reputable company that has been helping people from all over the world. And the fact that you do have this international background, the fact that you speak multiple European languages. You grew up in both Spain and Italy, correct, if I recall correctly?
Absolutely. I was born in Spain, actually. I grew up in Italy. My family had the business in both countries. And I've been back and forth between both countries, being raised in Italy from Italian family, I would say mostly, but always back and forth until I came to America at about 20 years old.
Gotcha. Well, again, the fact that you've been transacting business when so many companies have been depressed or had to shut down the doors, that speaks volumes. So again, speaking about this insane predicament that not just the US, not just Europe, but the whole world has been going through over the last 8-9 months, this COVID-19, how has it been impacting your business, Alex? Obviously, a lot of your international clients have been unable to travel here to make selection of properties once you identify whatever kind of potential acquisition projects they would be interested in. So how has it been impacting your business, your practice? Please elaborate on that.
Absolutely, and this is a very relevant question, of course, and we ask this question every day, and everything is evolving, as you know. So this is by any means, unprecedented, right? So nobody doesn't have any kind of experience when it comes to dealing with something like this. And the business has definitely been affected. I'm sorry, in a way that, especially being based in New York City, I remember this started around middle of March, if I recall correctly. For about at least 2 months, we weren't able to show properties in New York City, mandated by the state. There was a ban on showing properties.
Absolutely, it was, yeah.
So even if you wanted to, being that we're part of the real estate board of New York, there's very strict guidelines and so on and so forth. So the market has really literally paused, especially in the early part of this pandemic, for about 2-3 months, where listing sites weren't listing the days on the market anymore, which is one of the main, as factor and parameters. So everything really paused, and there were a lot of questions as to where we're going and so on and so forth. Now, a couple of things happened. I would say, number one, of course, the international investment has been limited, mainly because people couldn't travel from overseas and still are very limited in traveling. So this has really been difficult to navigate. On the residential side, I would say many fewer listings were in the market, about a third from prior year, month over month, year over year, right, from a year ago. So very limited supply, a little bit of a less demand because of the international market being not so present. But curiously, because of that, coupled up, as you know very well, with the historical low, record low interest rates, that created a fun combination of actually a very intense activity once the market was reopened and once we were able to show properties again. Now, as you may have heard, of course, one of the big trends were people leaving the city and leaving the urban centers in general in America, but specifically New York, and heading over into the suburbs, right? And because we cover certain suburbs markets, such as the Hamptons market was on fire. You were seeing 10-15% above asking accepted offers. So it was a very quick market transition where a lot of families, a lot of well-to-do New Yorkers decided to really pump up money in the suburbs market. At the same time, the city saw an exodus outside different areas, Florida as well, some to California, and so that created a tough time, especially for rentals, I would say, in the New York City market, where owners and landlords have really needed to give strong concessions, as we call them, to be able to rent their apartments and their properties in general and stores. And so the levels to which we've never seen since 2011. So the rental market really came down. And as a consequence, also the sales market, we're definitely in a strong buyer's market at this time, but sales market always follows, I say, the rental market, where the rental market, you perceive it right away, because if you're talking about residential, an apartment is either empty or is rented, right? And it's the market of today. Right. The tenant is not gonna wait. You're gonna see the effect right away. Usually, the sales market follows a little bit, and now we are in that market where market is open, meaning you can openly trade, properties can go on the market, and so we're seeing very interesting discount and what I called discretionary pricing at this time, where there's really little rationale to it, to the point that they always ask you, what's the discount right now? What deal can you make? Well, I would answer that it's very individualized and case by case transactions where truthfully, if you are dealing with an owner or a seller that is over leveraged at this time, you may see pricing very, very different. Of course, more aggressive on the low end, meaning you can get a better deal in that case. And there's some owners that they don't have to sell, so they're still holding off strong and maybe renting those properties and give it a year or two, right? So we're seeing and everything in between. But we're very strong with buyers right now. So to answer your question, how has our business been? Our business has been busier than ever. You'll be surprised to hear. We've kept all our agents, and actually we've hired a few more during the pandemic. We've definitely shifted towards a buyer's market. So we represented a lot of buyers, and we still are in this market. And every time, there's old Italian saying that every time the river is moved, it's a good thing for the fishermen. So definitely there's a lot of movement in the river right now in a way or in another. And a lot of people are taking advantage of it.
Those are excellent points, Alex, you're making, that, again, the market dictates the pricing. Either it's, retail market or commercial market, residential, commercial, either you're looking to rent, you're looking to buy or sell. It's amazing to see some prices that came down dramatically on the sell side, especially of the commercial properties, which a lot of times are decimated. I mean, you're looking at the vacancy rate of 40, 50, sometimes as high as 60, if not high percent. And as you said, hey, if you as an owner, if you're leveraged, especially leveraged heavily, then you're really forced to liquidate some of those assets. So if somebody is looking for an acquisition in a certain area of the market, certain type of properties, asset classes, then obviously it presents an incredible buying opportunities. Across the board, and you're right in New York City, though I do have an office in New York, and I'm still, using it very sporadically, if you will. But I've been working pretty much out of Long Island. But since you're in Manhattan on a regular basis, what on the average kind of discounts you're seeing being offered on residential and commercial properties? Just, the spread of numbers. Obviously, it depends on the cases. As you said, it really depends on how much you're willing to sell it, as soon as possible to get hold of cash.
Very good question. It varies greatly by neighborhood, by asset type. But to give you, a very general answer, if we're talking about residential has hold better the value than commercial properties. I do agree with you on that, absolutely. So in Manhattan, which is definitely the time to buy right now, especially because other boroughs have been doing great. Brooklyn has been doing well. Queens has been doing well. Manhattan is, because of the office, as you mentioned, you're not in the office. There's about 10% office spaces occupied right now. 10%. Right. So New York City is a city of job and city of offices. If people are not here to work, then everything comes down.
Ghost town. Whenever I go to Manhattan, it's like nobody out there. Yep.
Absolutely, yes. So I would answer on the residential side. We've seen discounts between 5% and 20%, and it's a wide range, and it really depends on price points. If you're talking below the $1 million mark, okay, which New York City can buy you 1, perhaps 2 bedroom. Still very competitive. You'll be surprised. We've had some bidding wars as well in the market. Now, when you're looking at $2 million and above, that's when you see deep discounts progressionally. So the more you go up, 5 million, even more on the luxury side, and there you're seeing 20% discounts on a regular basis. So it's really what price point you are. Now, talking about commercial properties, we've seen definitely steeper discounts in commercial properties, depending on what it is. So if it's a multifamily on entry-level apartments, studios, and 1 bedroom that are rented out, typical New York building, they've been holding pretty strong, I would say. Now, when you have a restaurant, because of what's going on in restaurants right now, they only open 25% for 2-3 weeks. They were closed before then and just had the outside part. So there you can see discounts of about 20, sometimes, I hate to say, but 30-35%. I say it's safe for landlords and sellers, really depending on personal situation.
It's fascinating because, as you stated, this is really a predicament that we have never been in, where on the one hand, we're seeing incredible number of businesses, shutting down their doors and vacating the space. So the properties are available at incredibly, great discounts. But at the same time, we're seeing so many people, who lost their jobs. They don't know when the next paycheck is going to be coming and where it's going to be coming from. And if you're fortunate to still hold on to your business, you don't really know what the environment is going to be, next month and next quarter. So you and I were on the same page as far as being optimists, and positive thinkers, because otherwise, it's not worth living our lives, I guess. But at the same time, I can totally understand the concern of the people trying to wait, until better times get in. And you have been through different market cycles, Alex, so you know well that it's impossible to time the market. And in my experience as both financial advisor and real estate professional, I know that whenever I can see a discount of 10, 15, 20%, that's a great deal. And as you stated, the deals they're being offered at even higher discounts, better discounts as far as 35%, sometimes and more than that. So even if the market dips, from these levels, we know that as an investor, as a buyer of that property, being it residential or investment property or commercial buyers, they're going to be probably in a better position 2-3 years from now than they would be otherwise, correct? So I would like you to expand and elaborate on your personal practice and working with the clients, especially overseas clients.
Absolutely. So let me clear the field and then be very clear on what the most important thing is and what my vision is. I am 125% towards New York coming back. Just to be very clear, I have no doubt that New York will come back. And I do think that right now we have a lot of things that are playing into this. Number one being the pandemic, number two being election year. Every time, forget about the pandemic. Every time we had, elections, the market tend to paralyze a little bit because they for whatever reason, they want to see what happens next. This year, we're also waiting for vaccines and, something that will come down the market as far as the virus. And political instability and et cetera. So I think all of this definitely plays out in all that's happening. Now, if you're asking me what's going to happen in a year time, 2 year time, when we're talking 2021, 2022, and everybody buys real estate for the long haul, right? They take 30-year mortgages. They have long vision terms. So if you're asking me 2022, 3, 4, 5, I have no doubt that New York City will come back very, very strong and possibly stronger than he ever was. No doubt in my mind about that. Now, what that creates is, from how I see it, a short window of opportunity. Don't ask me how long it's going to last. It could be that it lasts, another year. It could be that it lasts another 2 months. You really don't know what's happening, and I don't think nobody knows. What we do know currently is that there's a lot of uncertainty, and when there's a lot of uncertainty, if you have a clear bet or a clear vision as to what you want to do with the asset, meaning keeping it, and for example, you're betting on New York City coming back strong, then it's a fantastic time to buy. Now, to answer your question, timing the market, I'm not a fan of timing the market either. And I tell you more, I always try to stay away from very generalized and real estate analysis. Why? Real estate is not a stock, okay? And real estate is very individualized situation for a number of reasons. Could be location, could be floor, could be view, could be personal situation, could be leverage, so it's very, very hard to give a blanket statement, especially in real estate. What I would say is that when people ask me, is it a good time to buy now? I tell them that it was a good time already 6-9 months ago. So not necessarily you're going to get a better deal now or in the next 6 months versus what you would have gotten 3 months ago. It depends who you're dealing with and what deal you're dealing with. If the person that was selling, his personal situation got better throughout this, and there could be many reasons. Internet companies, for example, are doing very well. I understand, even better than usual. So it really depends what you're dealing with. I do think that we were in a buyer's market already for a good part of 2 years, if not going on 3. The height of the market was 2016, end of 2016, if you were to ask me. And since that point on, it became more of a buyer's market traditionally, and this pandemic definitely has moved the pendulum towards more of a buyer's market. Now, it is a time, if you are looking to buy right now. As you heard, the Fed has kept interest to 0 for the next few years, so they know that this is the time to do it. So mortgages are super aggressive. So it's basically free money, and from there you just have to find a good deal.
I completely agree with you, Alex, in respect of the fact that, hey, nobody has the crystal ball. Nobody can make any kind of predictions, especially with the real estate, especially in New York City and Manhattan itself, because it's not in by area to area. It's not in from zip code to zip code. It's really from building to building on the same block. You can have two buildings, and the approach in evaluating those properties, as far as potential cash flow going forward, than many other parameters that investors normally extensively utilize when they're making those decisions is completely different. So I can't agree with you more on that. And at the same time, we know that, again, buying today, people are getting 20, 25, 35% discounts. So that immediately puts them in such a preferential position as opposed to where they were, 8-9 months back before we got hit with all this COVID-19, insanity between lockdowns and riots and what have you, that obviously have been triggering the exodus of the people, from the city, either it's residential properties or commercial properties that have been left behind. But now, obviously, it is a great opportunity to take advantage. We don't know how long it's going to last, federal, state elections,
Sure.
the local elections, but we would definitely need to hope and pray that things will get better. New York being such an incredible place, huge concentration of, from, the companies, Fortune 500 companies from all over, to residential real estate, where the people may be full-time residents and citizens of other countries outside of the US, but they would like to have something on a temporary basis as pied-à-terre or just 100% rental property. So that definitely will keep making New York marketplace extremely attractive. All right, I wanted to speak about, Alex, about your personalized approach in a few dealings that we have been discussing together in the past. I know that you offer a lot of other benefits as a boutique firm over many other companies and brokers to that effect. The real estate market is way oversaturated, in my opinion. But I mean, the clients, they gravitate towards great advice, not a salesperson which is looking to close the deal, but really an advisor who can help them. Real estate represents a huge, probably the most sizable asset in many people's lives. People do not accumulate that much funds, their retirement plans and any other kind of investment. So obviously they're looking for somebody who's going to spend some time and dig, deep and dig extensively to understand their personal needs. So I would like you to take our audience through the process, how you approach the client and how you walk them through, every step of the process.
Absolutely. I mean, we've always, our business, I think of our business more as a private advisor, private wealth advisor when it comes to real estate. And the consulting approach has always been at the forefront of our business business model. And I do think that especially in a day and age where everything is dominated by the internet, everything is public information. And thank God, by the way, that's the case, because it really, we're a big fan of transparency, and that really allows for transparency. We always ask ourselves, how can add value to the client, right? And what we do is we do a couple of things. Of course, in our consulting aspect of it, we don't just act as brokers, where it's finding the property and make sure that the parameters are met, but we deal with the financing, with the insurance, with the legality. We have a team of people that we rely on and make sure that, real estate has a lot of boxes that you need to check, so to speak. And that has tremendous value, especially if you've done it in the past when you're advising a client, because they can achieve a great deal on one end, but maybe being lacking on another aspect of the deal, which can provide risk on that end. And so we are able to really have a great coverage for the whole deal. Also, property management is one aspect that we cover for property owners, especially that they're not here. And we see that that's really important. So I would say in 2020, if we're looking at the market as a whole, especially the brokerage market or the real estate companies and consulting market, it's been a tough year, truthfully. A lot of companies have gone out of business. A lot of larger companies have been consolidating. I mean, you heard, Corcoran and City Habitats consolidated. Caliber was bought. There's been a lot of companies went out of business, as you know. Compass had a setback. So there's a lot of movement right now, and it has to be. But I would say that a boutique business like mine, where is more based on productivity than mass, has been very easy for us to compete. The cost of marketing, the cost of competition, our listings have the same exposure than a larger company listing. The reason for that is because everything is online now, social media, listing sites. Entry barriers are very, very low. And that's, by the way, across any industry, not just real estate, but across any industry. And so we are seeing that a lot of these understanding that we're seeing that a lot of end customers are more and more inclined to considering brokerages more for the work that they do than for the name that they have, and especially who they're working with within the brokerage. And I think that's a huge opportunity for a lot of individual brokers, a lot of smaller companies, and it's tough for larger businesses to stay in business or to show profitability. A lot of them are showing losses. So I think this is a direction where a lot of the market is going. And I want to say also on a market standpoint, we have been very active, especially in advising clients. We're organizing, as you speak, a real estate fund towards this opportunity that we talked about before, whether it's a multifamily. I mean, I personally bought a property last week myself, and I'm looking to do 2 more with the winter, through the winter, because it's a great time. So I would say that anybody that is interested, even in investing a part of this and being part of a fund and to really explore these opportunities, we're seeing a lot of them right now. We're really, really active on the investment and development side of things, which is a terrific time to do so. And the last thing that I would say regarding this is that, to be frank, Gene, I never thought in my lifetime that we would have such an opportunity when it comes to New York City. I mean, some people compare the current situation to the 70s, okay, as far as a lot of aspects. And to being able to buy at such a discount or such favorable conditions, if you are to scout the right deal, I never thought in my lifetime we would have this opportunity on the opportunistic side. This is the opportunistic side that I'm discussing, of course. It was really you couldn't expect that unless something like this would happen. So people that have some cash on the side or an opportunity, I don't know if it ever will happen in our lifetime, truthfully.
It is truly unprecedented, Alex, as you pointed out so correctly. But what makes it different for different people and companies is how you accept this fact and how you act, hopefully proactive as opposed to, otherwise. You mentioned some of the biggest companies, not just in New York, but in the country, Corcoran, Compass. I mean, they all went through major processes, call it consolidation. I call it shrinking, basically. When you actually have been expanding your company, hiring new staff, hiring new agents, and again, kudos to you. Obviously, you have the discipline. You have been able to, hold the fort, so to speak, and really weather the storm and then keep going. When a lot of people, they just kind of like throwing the towel. Well, gee, I can't take it anymore. It's just too depressing. So that's what really separates successful executives from the rest of the pack. We know there's plenty of people that would like to think that they're successful. They would like to think that they're strong. They would like to think that they can really face and deal with a lot of issues and problems. But once they actually have to deal with them, not everybody can come out, strong and with flying colors. You have done it. So, I definitely congratulate you on those things. You have been expanding, as you pointed before, Alex. So my question would be, do you plan on expanding to the West Coast? Do you plan on building more business overseas in Europe, in the UK? I know you had some plans in the past. So, in the light of current developments, how they've been affecting those plans.
Absolutely, yes. Sorry, I lost you for a second. The answer is
No
absolutely yes. As I mentioned, we are already very active in the New York market as well as Miami and Los Angeles market when it comes to the US.
Right.
Our next step, as far as an office that we are having the plans, will be for London when it comes to Europe. We see London as I call it the capital. While I call New York the capital of the world and definitely capital of America, I see London as the capital of Europe, so to speak, when it comes to a lot of different things, financials, and people traveling to London, probably the second biggest city. So that's definitely our next step. We'll see what happens with this situation that we're in as far as the pandemic, but in not too distant future, that's definitely where we're going next. And then ideally, we want to connect the main capitals of the world in the real estate market arena. Dubai, Hong Kong, those are other cities that we're really interested in, where now we have buyers from, and we are servicing in the American market. But because of these connections, We would like to roll out more plans of expansion in this market in the years to come after London, because we do see great potential and great opportunity for these cities to be interconnected for a variety of factors. And by the way, we do see that clients and investors that usually buy in New York, especially in the international arena, they usually have already interest and properties in the cities that I mentioned already, whether it's London, whether it's, again, Dubai, whether it's Hong Kong. So there's a certain trade union there with the different cities that it's happening, and we simply follow the trend and serve our consulting approach towards that market.
Those are great cities, London, Hong Kong. As you may know, Alex, I spent just about 8 years with Hong Kong Shanghai Bancorp as a wealth manager, and I've been dealing very extensively with the clients from both London and Hong Kong. Obviously now the UK not being part of the European Union, they're stepping
right
on a new path, and going to the next stage. But it was actually from my British clients when I was still at HSBC that I've heard the term nylon. I don't know if you've heard that. Nylon, NY, stands for New York for London. So that's a new term that they clipped, just talking about, interaction between the two largest cities, across the pond, as they call it. And with Hong Kong, if anything, I agree with you in that respect, because with, the mainland China taking over more and more of Hong Kong, as an independent, so to speak, territory, more and more people in Hong Kong, they're getting more and more anxious to take their assets out of Hong Kong before, mainland Chinese government really takes over altogether. And they have some very valid concerns, in my opinion, which is backed by what's happening down there. And they're moving more and more funds to, to other places, including but not limited to, London and New York and pretty much all over across continental US. So totally agree in that respect. Well,
and by the way, I was going to add something more. Since we talked so well, and gave so many good news about buyers, let me give also some fairly good news to sellers as well, because our poor sellers,
right.
if I listen to this, they're not going to be too happy. But I would say we do have a lot of international clients that are ready, able, and willing to deploy capital in the United States as we speak. Okay, they're being a little bit limited right now with the travel. Okay, but I do hope, and I actually am certain that soon enough they'll be able to do so. But in the meantime, we've been able to do deals via Zoom, via video call, via via the internet, very effectively. So I would say that New York is still considered, and might as well even more so at this time because of what's happening, a fantastic opportunity. So we're working actively and currently with international buyers that are very interested in New York, and that could be a good thing for seller for sure.
Well, that's a great and positive news for the sellers and international buyers. So I think on that positive note, Alex, we can wrap it up. So I do want to thank you for coming to join us. Great and very informative conversation. Hopefully our audience has learned, some interesting information. Before we sign off, please state how the people can get in touch with you for any kind of real estate needs.
Absolutely. So the best way, my email is alex@carinigroup.com. CARIN as in Nancy I, that's my last name, or any social media at Carini Group. You'll find me LinkedIn, Facebook, Instagram, all social media. Just everything is on Google if you Google my name.
I know you're very active all over the online, either it's Instagram or LinkedIn, and I'll make sure to post it in the description section of this segment. All right, Alex. So again, thank you very much. Congratulations to you on all the great things happening to you professionally and personally. I know the family is doing very well. So kudos and congratulations. Well, stay safe, and I hope sometime down the line you can come and join us back again. All right.
Thank you, Gene. Thank you, Gene, so much, and appreciated all your time and your great audience. And congratulations to you for this wonderful, wonderful initiative. It's wonderful.
You're very kind, Alex. Thank you so much. And folks, again, hope to see you next week. Our audience enjoyed. Stay well, stay safe, and there is the light at the end of the tunnel. So bad times will pass. Good people, strong people, they will overcome all the issues, all the problems, and we will get better and stronger. And best wishes to our audience. All right.